All right, we're live. Hey everyone, I'm Vaughn Mordecai, and I'm the CRO of Mind Matrix. Welcome to our video uh, podcast that we run. We run these with partners of Mind Matrix and people across the industry that work on partnerships and channels. And I'm here with Akash. Akash, maybe you can introduce yourself really quick.
Yeah, thank you, Ron. So, hi everyone. I look after go-to-market strategy at Mind Matrix, and working very closely with partners like Ed is one of my key focus areas. So, today's topic is quite interesting because as most of these companies have wrapped up their annual business planning, so it is going to be quite interesting to listen and learn from Ed, who brings decades of experience into manufacturing and channels. So, pretty excited to be here. Over to Ed.
Yeah, thank you. Thrilled to be here with you both and to have this opportunity to talk about what I think is kind of a niche area of partnerships and channel management, but an important one. It's one that I've spent years in, and that's in the manufacturing space.
Yeah, I've worked on some of the manufacturing, but it always has a tendency to be the tech companies, the hardware manufacturers. And I'm really excited today to listen to Ed because he's got a wealth of experience around many other types of manufacturing. So maybe to start out, Ed, why don't you tell us a little bit about your business and what makes you kind of an expert in this space? That would be a really good starting point.
Sure, absolutely. And I'll do it real quick. If people want to learn more, they can certainly go to my website. But my company is Consilium Global Business Advisors, and the essence of my work is working with industrial, so I would say lower and middle market industrial manufacturers, kind of in the 20, 30 to $300 million range, to help them bring the kind of the mindset, the process engineering attitude, continuous improvement KPIs that make them so good in operations and manufacturing, and apply that to revenue growth across strategy and the board and the marketing and the sales and the technology that they use. So that's really the emphasis of what I do. It's entirely focused on revenue growth. Some of my clients sell directly and some sell through channel, and many obviously have a combination as well.
Wow. So a lot of us know the hardware manufacturers, okay, in the industry. They may have been the start of quote unquote channel for the tech space. How does channel management in partnerships and channel, the stuff that you see on LinkedIn coming from all around us, how does that channel management for just the regular old tech company differ from channel management in this manufacturing space that you belong in, or that you have such an expertise in?
Yeah, I think it's an interesting question, and it's not only channel management, it's marketing. If you look on LinkedIn, the stuff about marketing, it's fabulous. If you're a SaaS company, it's a little bit hard. It's not quite as accessible for an industrial manufacturer. And I'll kind of qualify the things I'm going to say by reiterating that I focus on industrial manufacturers. So companies that bend steel and put controllers on it and have something come out the end of the building that goes often into another factory for use in another manufacturing process. But I'd say in terms of your question, there are similarities and there are certainly differences. The similarities in many ways, just because the channel relationship has a certain set of kind of attributes to it that are almost independent of the industry that you're in. I'd say the commonalities include the fact that you've got two different companies, and that means there's two different cultures, there's two strategies, there's two different sets of customers, and you have to figure out how you're going to try to merge those and how you're going to work between them. So I would say that really the answer may not be so much just trying to refine the channel management as it is to create a channel partnership. And that's a buzz term these days in nearbound, and it's kind of like talking about ecosystems. But if we take the buzz language out of it, I would say that what we're really talking about is mutual success.
Yeah.
And I think that whether you're in tech or in industrial manufacturing, too often the discussions of annual planning and mutual channel success have not really focused on the mutuality of it, and it hasn't really dived into, or divin into, however you want to say that, into the fundamental motivations for it. It's been just this superficial kind of a thing where you agree that there's some target that's arbitrarily selected. Now, obviously, there are differences. I mean, in the industrial space, there's a lot more windshield time, whereas in the SaaS space, there's a lot more Zoom meetings. Doesn't mean there's not Zoom in the industrial space, but you've got an opportunity of a different kind of time together. You're sitting eating lunch in between meetings. You've got an opportunity after meetings to do a good kind of recap or after action review. So certainly there are differences. I think in terms of annual planning, the bottom line, regardless of which side of the equation you're on, is you don't just want some kind of a successories poster, kind of a bullet point. You want a real understanding of what mutual success looks like, how it's going to drive revenue. But beyond the revenue is only it's a KPI, and it's a means to an end of achieving other strategic goals. But you really have to understand why the revenue is important, what those goals are.
So one of the best parts of what you've just said is that these are the companies that bend steel, and I love that, because that is not figurative. That is actually quite literal. These are the companies that are doing these types of things. Now, you kind of alluded to the differences between them, but aside from the revenue, when they get into partnerships and channel, what is the outcome that they're looking for from all of that?
So I think that depends. There's some that are really very formulaic and sophomoric, and the outcome they're looking for is to have a document that they can come back to a year later and see if they hit a revenue target. I think the more mature and more sophisticated ones, and this is independent of whether we're talking SaaS or technology manufacturing or industrial manufacturing. I mean, there's thoughtful strategic companies, and there's kind of shallow companies in both those areas. But the thoughtful ones see the outcome as achieving or working toward strategic business goals.
And the funny thing about this, okay, so in industrial manufacturing, the resell is quite literally the bent steel. Then, I mean, like that. What are some good examples of the types of things that they're reselling or referring, or using these kind of terms that we use in technology? What are the types of things that they're doing on behalf of the manufacturer?
All right, so I would push back on it, and I would say that they're not selling the bent steel. That what they're selling is a business outcome, and rather than a McKinsey binder that works toward achieving a business outcome, they're doing consulting, and they're delivering a tool in the form of a machine or a product or an industrial service to help that manufacturer achieve an outcome on their end. So, I think that it's going well. We'll probably talk a little bit about maybe the ideal partner profile, but I would say that an important element of that partner profile is to align. Now, some companies just see themselves as pimping products, and that's okay. I mean, that may be the way they do business. On the other hand, if they see themselves as helping their customers attain serious business outcomes, then you want to make sure that that's aligned in the way you look at business.
I love the idea of ideal partner profile. Let's expand on that just a little bit. And what does an ideal partner profile look like in this space? And then what are some of the kind of more prevalent issues that kind of come up when they don't engage with partners that kind of align to this to this ideal partner profile, or don't do these kinds of business planning exercises?
Yeah, so those are probably two different questions, and I would say the ideal partner profile really depends on the company. In some cases, an ideal partner could be a company that has a bunch of sales reps and puts a logo on a line card and just kind of brings it up in conversations periodically and tries to generate some volume. On the other hand, for other companies, the ideal partner profile may be a company that's got a small sales force, but with deep relationships in a particular niche industry where they're trusted and go in and introduce new ideas and speak to the board and help them understand how they can strategically change their business. I'm not saying either one is right or wrong. It really depends on the situation or what each kind of company is looking for. But that's why it's so important to define it, because if you've got one of those in mind, if that's the picture that you have of what you're looking for and you're talking to the other kind, then there's certainly going to be a dissonance. It's not going to be a good match.
Yeah.
Uh,
Ed, I think I have one follow-up question on that. So with your experience into manufacturing domain, so when any manufacturer go and evaluate their IPPs, right? So do you think that are they considering the right KPIs in order to have that annual evaluation process in place? Or it has just become a chore, and they just move on after discussing few financial parameters, for instance, sales, what has been the sales margin, what has been the sales volumes, sales CAGR. So do you see beyond just the transactional value while evaluating their IPPs?
Yeah, I think so. But I think it's also important that we don't conflate the IPP and the KPIs, or the ideal partner profile and the KPIs. So the ideal partner profile can certainly evolve over time, but let's just talk about a snapshot as opposed to a movie. And let's say that we want to understand today, as a potential channel partner, what we want in a vendor, and as a vendor, what we want in a potential channel partner. And
Yeah.
a lot of that goes back to this kind of philosophy and the type of market you're in and how you go to market. And is that a match? The KPIs, on the other hand, I think is a slightly different question. And too often, what I've seen is the KPIs just get distilled into last year's revenue number plus 3%. And, there's no thought explaining why that might be the case. And everyone hopes that they can push through enough price increases that actually they could have negative organic growth and still hit their target number together. But that, I think, is short-sighted.
Yeah.
So if you do have a good ideal partner profile, and let's say, for instance, part of that from the vendor side is you're trying to find a channel partner that has a particular niche where they're very well known, they're very well respected, they have deep relationships. Perhaps it's a new market that you're trying to get into strategically. Then it's, I think, important to not only find the match for that partner profile, but to establish KPIs that reflect it. So maybe it's not revenue for the first year. Maybe it's the number of relationships that they help you build in that new market. Maybe it's the number of demos. I mean, I hate demos as in the software world, it's kind of a silly criteria in my experience, but it's a way that companies can begin to at least measure the engagement. Maybe it's the number of conferences that they help the vendor get somebody on stage speaking at because of their connections in the industry. So I think the KPIs depend on the stage and the life cycle, the maturity and the journey of the relationship and entry into that market, as well as obviously some revenue targets.
Yeah, interesting. I'm gonna maybe go off point a little bit here, but we end up with in these videos, we end up with a lot of different types of viewers, and some of them that are on here are probably really interested in getting involved in being partners with industrial manufacturing. If they were interested in that, what are a couple of tips that you would give them in terms of how to start to spin up that practice?
So in other words, a vendor who wants to establish more industrial channel.
Yeah, or they want to establish an alliance relationship. I mean, there could be a few different things like that, but how does that start?
So I think it really has to start with that ideal partner profile process, because there's so many companies out there. You could run through LinkedIn Sales Navigator and find a bunch of people that you could shoot emails off to, and not only might they not be interested, but you might be better off if they're not interested, because they absolutely wouldn't be a fit. But if you can understand what it is you're trying to achieve with that channel, then I think you can obviously identify the right people. But you also said something interesting, I think, Vaughn, and that is, I think you used the term alliances. So there's a great opportunity that I think gets investigated too infrequently, and that's stepping outside the traditional reseller or indirect sales channel and thinking much more about partnerships from a marketing and from a sales perspective. And that's, I think, one of the really cool things that the near-bound movement has started to help companies do. I mean, it's possible that you're not worried about finding any sort of a reseller, but what you want to do is build relationships with companies that are well established adjacent to where you are, with the kinds of buyers that you want to be reaching. And if you can begin to forge a relationship there, it's got nothing to do with creating revenue via each other, but it's about reaching the buyers with the credibility that comes with an introduction from a trusted current vendor, and that's often enough to get a conversation going. And what I hear from industrial sales leaders and business leaders is that probably the biggest challenge they have is starting new conversations with new prospects, and so it's a great avenue to try to have those conversations.
I like that.
And
So go ahead, Akash.
yeah, Juan, I just wanted to echo on Ed's point, and I also feel that near-bound co-sell motion is way efficient than the traditional sales motion that these traditional manufacturing companies offer. For example, going into the market and having face-to-face meetings with those prospects and partners. So this is something that also we can think of, that how to reduce our CAC while opting for this near-bound strategy.
So it may be more efficient in net in the long term, but it feels very inefficient for the way these companies tend to look at the market. I mean, the way they look at the market is they go to the trade show, they get a lead. There's a company that says, we've got a project in place, we have a budget, we have a timeline. Here's our technical specs. Tell us what you can do for us. And so when you start talking about trying to build partnerships with companies that have nothing to do directly with what you do, that's a kind of a big mindset shift for companies in the industrial manufacturing space, and particularly because they tend to think of themselves as such deep, um, so kind of deeply knowledgeable about the technical details of what they help a company do, that they start to very quickly feel like, wait a minute, we're talking about things that we know nothing about. It's not our space. We shouldn't be wandering into that. We're speaking without the appropriate credibility and depth of expertise, rather than understanding that what they're doing is just by collaborating, sharing information that will be meaningful and helpful to their communal buyers.
Huh. Interesting. So what is a good business plan look like in this space? We all know kind of how the tech companies are approaching it, but when you're dealing with that particular issue where they may or may not feel like they're equipped to do certain things, they try to stay in their box, you know how do you build out an effective business plan that grows the revenue instead of just hopes for 3% increase and enough to offset any losses on the year?
I think the best analogy that I would use is take it back to what a good sales manager does with a sales rep. If the sales rep is struggling to hit quota, flogging them about the number of cold calls they're going to make may be an important part of what you have to do, but it's not going to actually change the outcome. You have to keep them on track. You have to hold them accountable. But what's really going to help them achieve it is if you as a sales manager understand their personal goals and can tie the attainment of quota and the money that comes with that to them achieving their personal goals. And by doing that, then you change the conversation from do it because I'm telling you to do it to one of do it because this is going to help you achieve what's so important to you. And I think we can use exactly the same model between companies. So, I mean, let's say that one of the parties is, I mean, in the industrial space right now, for instance, there's a ton of companies that are owned by boomers that are going to change ownership or liquidate over the course of the next 10 years. And so if we talk about that silver tsunami, then that means that there's a lot of companies that could be potentially vendors or potentially channel partners, either way, that have some sort of a transaction coming up, whether they're planning for it and preparing for it or not. What if an important part of the annual planning became, hey, we know there's a transaction that's going to happen. We don't know whether you're going to sell to a financial investor or a strategic or an ESOP or whatever the case is going to be, but let's help the business get on a more solid footing. Let's create repeatable, predictable revenue. And so let's step back and talk about how this relationship helps you do it. So from the vendor perspective, maybe you go to a channel partner that you know is it's a large distributor that's going to have a change in ownership and say, we want to help you get into new markets that are going to reduce the volatility of your current sales. And so here's how our products will help you do that. we understand where you are in your business life cycle. So let's talk about how we can collaboratively help you get into those markets, be successful, show a track record, introduce, repeatability, demonstrating quality of earnings that's going to help your multiple when it comes time for you to sell. That suddenly changes the whole conversation. Instead of talking about, how many new accounts have you people found on Zoom Info and begun to reach out to. Rather, it's a conversation about how you're going to help the company and the owner and the people there achieve their goals. And so then the tactics become, I think, it's much easier for people to embrace the rigor of execution when they know they're doing it for an important reason.
Yeah, that's and the outcome is growth, but the growth is not necessarily, you're not flogging people to the growth. You're leading them to the growth, basically.
Exactly. The growth is a byproduct of working collaboratively toward whatever those big strategic goals are.
I really like that.
Ed,
Really
I
like
think just one thing from my side. When it comes to annual business planning, do you think that we should also consider channel partner rationalization? Because this is one piece I think most of these manufacturers, I'm not sure whether they are considering into their business planning, because most of the folks only focus on how many partners we can recruit on an annual basis, and let's go and hunt those prospects and enable them. I'm not sure whether people think about channel partner rationalization in the first place, because that's, to me, it's an important piece, whether to see whether those partners that we have are adding value to my business or not.
Yeah, of course. And so in terms of annual planning, number one, you probably need to start in September, not on December 15th, because, that's just, you need to think about it seriously. Number two, companies evolve over time. And so it could be that there was a very strong mutually beneficial relationship at one point that no longer is.
Yeah.
Maybe there's a new owner or a new VP of sales that has a different priority, or whatever the case may be, things change. And so you do need to continuously, obviously loyalty is rare and valuable in business these days, and honesty and relationships are certainly important, and we need to recognize those. On the other hand, things change. And if it's no longer a fit, then let's talk about why it is and how we can change that. There's also this, I think, an inclination, if a company starts talking about trying to build their sales channel and they send their channel managers off to just sign distributors up, it's destined to lead to a lot of bloat and a lot of frustration. As opposed to really having a clearly defined ideal partner profile and working hard, not based on numbers, but based on the quality, to find those partners and gradually bring them in with a good onboarding process and a mutual vision for what the success looks like.
Yeah.
Is that why you need, in previous conversations, we've talked about needing to reassess your ideal partner profile on a pretty regular basis. Is that why? Or do you have other ideas on why you should consistently look at that?
I think that's a big part of it, but I think that also companies mature along the way. And so what you thought was an ideal partner profile based on a certain market circumstance at some point may be different now. I mean, a great partner profile in 1993 might have been somebody with a lot of feet on the street, a lot of windshield time, and just, spraying line cards all over everywhere they went. Whereas today, the ideal partner profile may be very, very different. Perhaps it's a company that has such a strong digital footprint that they will help to reach the market in ways that the manufacturer can't. Completely different set of criteria, but working toward mutual success.
Interesting.
Juan, I think I have one for you.
Yeah, please.
So I want to circle back on ecosystem, what Ed mentioned earlier. And I know you wrote a white paper on it. So I want to have your thoughts that, since traditional approach of channel in manufacturing has been very linear and transactional. So do you think, from your experience, because you have been in channel for decades as well, do you see any value if manufacturers opt for ecosystem-led approach compared to the traditional approach that they have been doing so far? Do you see any value in it if they are opt for?
I'm really curious to hear Ed's response to that, because I'm a believer in ecosystem. It's pretty apparent in the technology space because of solution selling and the way that things move. But in a more traditional industrial space, are you seeing ecosystem emerge as a thing, or is it just a few years behind, and it's not really become an issue yet?
So I'd say short answer, I'm not hearing anybody use the term. I think there are a few very kind of forward-thinking companies that may be starting to build what is an ecosystem, but they're not doing it with the consistency and with the basically the go-to-market model that you find in SaaS, where they've got a platform for plug-in solutions that fit together into this ecosystem. So it's not nearly as I would say a commonly understood and used sort of a term.
Oh, that's interesting. Now, is there sort of a dark ecosystem going on? And by that I mean, are there ecosystems that people just have not actually started to call ecosystems? Multiple companies working together to build products and solutions that are better than they would have been able to produce on their own.
So certainly there are some collaborations, and I would say there are some roll-ups. In some cases, private equity firms have come in and bought a number of companies and build an aggregation of different brands and different capabilities that are all adjacent and fit together. I think that to categorically answer is dangerous, but in my experience, most industrial manufacturers are pretty focused on the stuff that they make and not
Mm.
so much on other things. I mean, I'll even tell you one of my struggles is in introducing the idea of partnerships, trying to help a manufacturer. Uh, I'll give you a little bit more background. I work with companies that build capital equipment. So if they're trying to sell $1 million or a $5 million machine into a company that already has two or three of a competitor's machines, it's a hard lift. Even if the competitor's machine screws up, even if they can't get spare parts, it's still risky for an engineer to go out on a limb and say, I think you ought to buy a completely different machine and put it in here. So
Uh,
if you're in that situation, how do you do the competitive knockout? I think you need to get in there with a commercial relationship beforehand. It's what I call an entry sale. And so in the machine world, a great example is machine monitoring. That technology is now readily available. Many of the machine manufacturers haven't adopted it themselves, but there's plenty of companies out there that have plug and play solutions. So I'm always talking to machinery manufacturers about, why don't you build a relationship with a company that does machine monitoring, perhaps become a reseller for them. Perhaps it's just a partnership where you're making introductions, but it gives you something to talk about with a company who's not interested in talking about replacing one of the machines that are working right now with something that's completely different and taking all that risk. On the other hand, you can go in there and talk about helping them with their business. You build a commercial relationship. You're getting paid for doing something, and in fact, you're getting paid for being on the floor in the factory doing your kind of qualification and business development work, building relationships, getting people to tell you honestly what's going on, observing with your own eyes where the warts are, and able to then do a much better job when it comes time to try to sell your primary product. So I think there's huge opportunities, but again, we kind of bump into this situation where what I often hear in response to that, yeah, sounds good, probably would work, but that's not our expertise. We don't want to do that. Well, exactly. That's why the partnership becomes so powerful for you. You don't have to invent it. You don't have to support it. You probably don't even have to sell it if you just make the introduction and then tag along and listen to what's going on.
yeah, that's really good insight. That's really, really useful information.
Ron, we have 2 minutes
Yeah,
left.
we're running out of time. Akash, do you have any final questions?
Final question for you. How can Mind Matrix help manufacturer orchestrate this entire annual business planning?
Yeah, is there a place for ecosystem orchestration or PRMs or partner platforms in this whole world, Ed? Where does that look, or how does that?
I mean, the answer is we're here talking, right? So
Yeah.
I believe that there is a place. Now, I think that one of the impediments in the past has been the idea of having a completely separate platform that somebody had to sign into. It was cumbersome. It's hard enough to get industrial salespeople to log into their CRM consistently, much less into another platform. I think what's really interesting about the evolution of technology and the way Mind Matrix approaches it is that essentially we could set up a CDP or a customer data platform that's an integrated and aggregated data set that understands what's happening with a prospect or customer at the channel partner level and at the vendor level or the manufacturer level. And by integrating those, then we're able to kind of create insights and intelligence that will support a mutual sales process much more effectively. And that's really, I think, if we can help people sell more, sell better together toward the achievement of those strategic goals, then that's a great solution. So I think the answer to your question is yes, there's absolutely a place. I think there's a lot of education. We have to be careful that we use terms that are appropriate and not using a bunch of buzzwords, and that we understand the limitations and maybe where people have stubbed their toe in the past and address those. But I think, yes, absolutely, there's a huge opportunity.
No, that's a great mic drop moment. Hey, yeah, really appreciate your time, Ed. That's really insightful information, and thanks for jumping on our video cast, on our video podcast. Really appreciate it, and we'll be watching to see what kind of great things you do in this space in the future. So thanks for your time, and with that, we will log off. Thanks everyone, and till
Thank
next
you.
time.
Thanks, Vaughn.
Take care.
Thanks,
Thank
everyone.
you. Bye-bye.